VP Group Leader with Motilal Oswal Financial Services joins us. Okay, Rahul, what are we staring at? Are we staring at more weakness, or you think worst of the pain is behind us?
Hi, good morning. I think what we have been seeing is I think weakness is there in the markets, and I think it's going to be time-wise for some more time, and I think it will be more a stock-specific approach rather than the holistic approach which used to be before 6 months or so. So I think it would be a time-wise, sideways markets. Few stocks will perform, few select stocks will perform. I think that's what we've been gauging. I think then few select sectors, few stocks from there will keep on performing.
This move where sell capex, buy consumption, is that more like a frog in the well, Barsati Mendak, or that trend has turned from capex to consumption? Rahul?
So I think, as you rightly pointed out, this finance minister has chosen, I think, after a long time, I think, savings, consumptions over a capex. And then if we look at it, I think savings has been what they have been trying to build it, what the budget talks about it. So I think looks like, I think, again, after a long time, like, I think consumption can be the theme for the next 1 year or so, and maybe we'll see the how the things fares post a couple of quarters. That will show us the real picture.
Rahul, wanted to get your sense in. We were just analyzing Divi's numbers and the kind of brokerage commentary that's come in thereafter. The CDMO play, of course, is well discovered, but do you think there is still merit in buying into Divi's at these levels?
So I think a true sector which has emerged very well and I think has been playing off very well in last 2-3 months is obviously one is the pharma, and pharma also again select stocks have been doing well. So DV's numbers were good, and I think as per our expectations, what the analyst was expecting. So I think we would see some kind of momentum still building up in the DV's lab. So what we expect, I think another 15% run up from here. That's what the analyst view is. So I think that could be the run-up. And I think still, I think the large pharma companies will continue to do well in this sector. So DV's and Sun remains our top bets in this sector.
But Rahul, within the entire Capex theme, where is it that you're bargain hunting?
So I think if you look at it, I think if we weigh the capital goods stocks were performing versus what they are now. So I think it's clearly a trend that I think 7% kind of a growth in which earlier, which was 20 plus 2 years back. So my sense is I think it will be a very selective capital goods selected stocks from a theme what we like. I think obviously one is L&T, what among the entire thing, which was I think cheaper in terms of valuations versus most of the other players. And I think those players, other players like Siemens and ABB, I think we'll see some kind of a consolidation or some weaknesses, and from here there could be a muted upside in this. So I think very selectively. So I feel that Larsen could be a good bet from this entire basket in terms of capital goods.
Rahul, what are the chances that, let's say, PFC, REC, and now they don't really get impacted with capex cycles so much, so they get impacted with NPAs. I don't think NPAs are coming in the industry or in the sector. So what are the chances that the stocks 6 months from now could be significantly higher once the entire dust settles down?
So Nikunj, I think risk versus reward in both the power companies, I think power finances companies, REC and PFC, looks very, very promising. I think obviously the return ratios are the size of opportunity and what we've been talking about the entire power sector growth, and in terms of that renewable energy funding and etc. I think only two companies with a large market shares with, as you rightly pointed out, the NPAs are not the problem for the bank, for the companies. So my sense is I think the risk to reward is quite favorable, reasonable valuations. I think it's a no-brainer from here. Both the companies can give decent return from here if you're talking about the next 6 months.
Okay, that's the take coming in on PFC REC. But Rahul, what's a better way to play this entire power theme? Would it be via cap good names like a Hitachi Energy, ABB, Siemens, etc.? Would it be via financiers, a PFC REC, or would it be more the Tata Power kind of names?
So I think one most important thing which has played out right now is I think markets are not respecting the higher valuation companies wherever which have gone up. And we are seeing that growth could be muted in this high growth companies which they kept on reporting in last 2 3 years. So I think all these cap goods I think have to be very selective. So I don't see, I think to my sense, if I have to pick versus this, then I think power financial companies would be a safer, and the risk versus return plus the return ratios would be much higher versus all this cap goods plays. So I think power financial companies would be the better way to play from here.
Rahul, wanted to have a quick take from you because I was just going through the numbers and the margins look very surprising. The company has also announced a special dividend, and specifically onto the margin front, 27 and above is what the company has clocked in, and that's way above the guidance range of 20 to 25%. So a quick take by you on Castrol India numbers.
So I think entire oil and gas space, I think very few select companies have done well, and I think among that, I think bearing apart Reliance, I think rest most of them have done mediocre numbers. So and if we look at Castrol's prima facie number, which I've gone through, I think the numbers looks quite good, and I think that the steep correction in the stock prices also, if we look at it from the highs of 240s, 250s, and 170s are odd. So I think valuations are quite supporting at this levels, and this could see some surge in the stock prices post numbers.
All right, that's the take on Castrol India. But with this, Rahul, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning.